Most people my age are still in school, working part time jobs or just figuring out their next step. I decided to take a different path. Trading was something I got into because of curiosity, but over time it became an obsession. By the time I was 19, I had secured funding to trade in the financial markets, managing a 5 figure account. Here's how I did it. I'll break this down into clear sections with timestamps, so whether you're just getting started or already deep into your journey, there's bound to be something for you. Let's get into it. Like most people, I first came across trading online. Videos, gurus, all promising insane returns. But I knew real trading wasn't like that. I started exploring what it really took to be a profitable trader, and the deeper I went, the more I realized this was a skill that required more than just technicals and fundamentals. It took real discipline, a lot of emotional control, and adherence to plans, and a mind that was addicted to probabilities and statistics. At the core of it, every profitable trader has an ironclad structure in their approach to trading. Everything including their strategy, their mindset, and their emotions. One of the biggest turning points for me was realizing that trading isn't about luck. It's about probabilities and execution. I started by consuming as much educational content as possible. Books, videos, courses, but the key was filtering out the noise. Then I learned different trading styles, scalping, day trading, and then I experimented with different markets, different instruments. Instead of chasing the perfect strategies, I focused on probability-based setups that made sense to me. For starters, I focused a ton on price action. The real game changer though was backtesting, going through tons and tons of data to see what worked and what didn't instead of guessing. After I had a foundational strategy, I didn't jump straight into live trading. Instead, I spent months paper trading and collecting even more data. Paper trading wasn't just about getting used to execution, it was about tracking consistency and my adherence to the trading plan that I had in place. I treated it like real money, almost as if I was already trading $1 million. And I followed risk management rules, executing only high probability setups. This phase ultimately helped a lot in refining my approach without the emotional toll of real money losses. From my experience, data is everything in trading. If you're not tracking your trades, you're essentially gambling, shooting in the dark. I kept a detailed journal of every single trade that I took, and that meant tracking my entry, my exit, the market conditions, emotions, and all my mistakes, like not following the rules that I had in place. Over time, patterns emerged within the data. I saw which setups worked best, which times were most profitable, and which mistakes cost me the most. Journaling forced me to also take accountability for every single decision that I made on and off the chart, removing the guesswork from all of it. I also realized that reviewing and analyzing my own data was more valuable than consuming any more content, reading more books, watching more videos, or whatever else. I broke down my performance by win rates, risk to reward ratios, and market conditions. I made note of my risk of ruin, for example, and all these smaller details that help decide what worked best for a prop firm style of trading. I eliminated setups that weren't working and doubled down on what was. I treated my trading like a business, focusing more on optimization and risk management than anything else. This data-driven approach is what ultimately got me funded. I wasn't just hoping for success, I had the numbers to back it all up. Only after this is when I transitioned into taking an evaluation on my fund of futures. This has been said a lot, and to some beginners out there, it might sound like complete nonsense to you, but the most important lesson here is controlling your emotions. The market doesn't care about your feelings. If you let fear or greed take over, you lose. Simple as that. And this includes things like hesitating on taking a trade even though it followed your trading plan, or the urge to revenge trade and make back the day's losses. I learned to detach from individual trades and think in probabilities. No single trade mattered. It's the long-term edge that counts. My focus ultimately shifted from trying to avoid losses to managing them properly. Losses are inevitable. You're bound to lose in the markets, but you should know that it's just part of the game. This mindset shift was crucial, absolutely crucial, when taking a funded account challenge. Instead of focusing on passing quickly, I focused on executing my strategy consistently, day in, day out, knowing the results would take care of themselves. Now, before I close this video out, here's some final thoughts, and if you're serious about becoming a funded trader, then listen up. Seriously, just take your time. Don't rush into live trading without proof of consistency, both in your trading plan and in your mental state. Track everything. Track absolutely everything. Data will be your best friend in trading. Focus on execution and not results. If you execute well, the results will follow. And last but not least, just treat trading like a business. Be systematic, structured, and disciplined. If you're still struggling, don't get discouraged. Trading is a marathon and not a sprint. The goal isn't to win every single trade you take, it's to develop an edge and execute it consistently. If you found this helpful, let me know down in the comments. I'll be making more videos like this one, breaking down different aspects of my journey, so stick around. See you in the next one.